Hi again. We're here now for the last day of the eighth week, and we're about two-thirds through. And what we're going to do today is we're going to review the balance line buys and sells and how the zones affect them. We're going to quickly review the 4 days of this week. And again, let me encourage you to download Investor Stream to practice, because you can go through one bar at a time and see how these zones affect and change the buys and sells. Also, look at your computorial. There are a lot more charts there to practice on. And look at the study manuals and also the textbook. So right now, let's go right to the charts and let's review everything that we've talked about so far this week. What we've done this week, we started out by, again, reviewing that the balance line is that place where the current price would be if there were no new incoming information, which we know to be chaos. This week, our goal has been to understand the construction, the use, and the trading of the balance line in both stocks and commodities. Let's review the charts that we've already seen. Here's buying above the balance line, and when you're buying above the balance line, remember, it's very simple, base plus 1. And remember that the base is the most recent lowest high. So here we have the recent lowest high. The buy stop would be here. This third bar does not affect it because it is not lower than the most recent lowest high. We have an illustration here of the blue light special. The first buy was here, then it moved to here, then it came down even further, and finally at this point the market's willing to sell us base plus 1, or willing to sell us so that we can buy it right there. The most important thing to remember about this, so that you don't get confused, is that the crucial location is where the signal is. It doesn't matter where the base starts off, it's where that signal is hit. If that signal is hit above the top of the mountain, it's going up, would be downhill. If it's hit below, the path of least resistance is down. Let's look at buying below. The only difference between buying below and selling below is it takes twice as many new highs, twice as much new information to buy it as it does to sell it. So over here it takes base plus 1 plus 2. Over here it takes base plus 1 plus 2. And base, remember, is always on a buy the most recent lowest high. Here the most recent lowest high is down here. The market has again given us a blue light special. Let's look now at selling. Selling above the line means that we're going uphill. So it takes twice as much. It takes base minus 1 minus 2 minus 1 tick below the bottom of the bar labeled 2. Over here we have a base minus 1 minus 2. Again, the most recent bar is not the base because the base is the most recent highest low. And again, we have an illustration of the market going up and giving us a blue light special. And remember, once again, that these are stops if it's selling above the alligator. If it's selling below the alligator, it's entries. Now let's look at selling below the balance line. And since we're below the balance line, these would indeed be entries, provided that a fractal down has been our first signal, and that fractal down outside the alligator's mouth has already been hit. Then we want to be very aggressive. So anytime the market gives us a base minus 1 below, we want to sell. And over here we have base minus 1, we want to sell. We have a blue light special. And once again, the illustration in the lower right hand corner illustrates that it doesn't matter so much where the base is, it's where that signal bar is hit. That's the important thing. So you would be short 1 tick below that. So that's our basic balance line buys and sells. And then we add the momentum to that, and the green zones and the red zone. The green zone, remember, is the momentum's up, it's accelerating. When you're in the red zone, the momentum's down, and it's accelerating toward the downside. So if it's accelerating toward the downside, whatever you would normally do in a green area or a gray area, which would be buy plus 1 up here, you double it, buy base plus 2. Here to buy it would be base plus 2, but if you're in the red zone, base plus 4. Likewise, if you're in the gray or red zone and you're selling the market, it would be base minus 2 above, but if you're in the green zone, which means that the momentum and the acceleration is up, you would double that. And on the downside, it would only take base minus 1, but in the green zone, we would double that to base minus 2. So we've gone over this over and over again because it really is simple. It may sound a little bit confusing and a little bit difficult at first, but practice on this and you'll find it's very, very easy. We're coming now to the end of the 8th weekend, and here's what our job is. We want to review the week to make sure that you understood the balance line signals and how to locate them on the chart. We also want to review all the material that we've covered so far in this study. And we want to make sure that you plan to have a great date with your inner trader this weekend. Also, hope that you're continuing to record your reaction in your morning pages, what you learned about yourself and what makes you happy, and then also how this can aid you in your trading. What you still have to look forward to is we're going to spend a week on stops. We're going to spend a week on the Elliott wave, how to accurately count the Elliott wave. Then we're going to spend most of a week looking at the markets and showing you how we would trade. We're all going to get together here and talk about different charts and what we would do on the different charts. And then the last week, the 12th week, we're going to spend that entire week with a schedule of how we suggest that you use psychological facilitation, how to get in the zone in trading and get to that highest peak where you are a master trader. So have a good weekend, enjoy your weekend, enjoy your have fun, study the manuals, and we'll be here next week for week 9.